Welcome to this week's episode of Your Stock Request for the 29th of September. Hi, I'm Michael Gable, Managing Director at Fairmont Equities. Your Stock Request is the weekly video where I take your requests and analyse the share price charts. So this week we have Ampoll, Brickworks, Linus, Corp and Corporate Travel. So if you have any requests, please send them through. Make sure you've signed up to the free newsletter, but my better ideas come out every Tuesday. So make sure you've subscribed to the Dynamic Investor Report that comes out on Tuesday to get all your stock tips. But if you do enjoy these videos, I'd love you to share them on social media or even leave us a review. My main business is in portfolio management, so if you'd like my direct help with buying and selling and getting my advice, then please let me know. And all the advice here is general only. Alright, so we've got a daily chart here of Ampoll. As we could see, it had a decent run up until a few months ago, but then there was a sign of exhaustion, so we could have said, okay, an ascending triangle here, breakout, but within a couple of days you had this gap up to close near the low, and then within a few days it failed and was back in the range. So failed breakout there, and we could see that it then struggled after that. During that period of time, there was a very obvious level of support at $32. Now, if I was holding this stock, that would in some ways make me a little bit concerned, because most people think that the more you test the level, the stronger it is. It's actually the opposite. So the longer that Ampoll spent banging on $32, the weaker that level is. So it's actually a concern. If the stock was bullish, it shouldn't have been anywhere near support for such a long period of time. So ultimately, when it did break $32, that would have been a very clear sell trigger, and we could see it quickly went from 32 back to about 28. So look, there might be some support here at 28 because of these couple of lows here, but it's fallen quite sharply into it. So, at best you might get a small bounce for a couple of days, but it's not, buying something at support. I think in this sort of market, it's a bit dangerous. Okay, Brickworks. So we could see the decline over the past year, and then it sort of accelerated there a few months ago, only to bounce back almost as sharply. So you've got this sort of V-shape sort of decline and a bounce, and then naturally after that you need some sort of consolidation. So at the moment it looks like it's giving us a bit more of a sideways consolidation. So instead of coming back to do a higher low, it's tracking sideways, which is actually a good sign. So we might be seeing this buying opportunity pretty soon. So what we've got here is some resistance at 22, and it is creeping higher at the moment. So we may well be getting an ascending triangle. Ideally, what you need to see is, while it's in this consolidation, if it can just stay closer to $22 instead of dipping, that would be good. If it can hover up here and then break above 22, that's your buying opportunity. If it starts slipping all the way back down here towards 20 and so on, that's not a great sign, and that may well lead to a move down here. So, but so far so good with the way it's trading. Okay, Linus. So since early April, it's been, as we could see, declining. It's just making these lower lows. Even the most recent fall, I think, is looking pretty negative. So you had this sort of gap down here and closed on the lows, taking out that low. It then recovered, which possibly could have been a good sign, but we could see yesterday it opened higher and then took out the low yet again. So, not a good sign. I mean, it may well give some kind of bounce today, but it's just not an ideal setup. I mean, ideally you want to see it sort of flatlining a bit more. I think, if you look back at these previous occasions where Linus has made new lows, it has bounced back in a V shape, but I think that's it's a bit of a gamble to buy it here, assuming that we're now going to get a V shape. As I said, ideally you want to see it level out. If I just sort of zoom out, we could see sort of in mid 2021, it leveled out, and that gave a really, it was a good opportunity. It was a better probability trade because you got a bit more obvious support. I think this still just looks a bit dangerous. Credit Corp. So on the way down, clearly, I mean, if we look back at this sort of price action here, there was a very clear channel. At one stage, we could see earlier in the year, it broke that, came back to sort of retest it, and then failed. So, those would have been the sell signals, and now it's just clearly in a downtrend. And the price action is very weak. Again, if we zoom out, there was a few turning points a couple of years ago at $15. Maybe it finds support then, but looking at this stock, it's sort of stock I'd want to be in. There's very much a clear downtrend there. Okay, and corporate travel. So I mean, just most recently we had what looked like a potential base sort of forming here on the stock. Bit of a base breakout, but that failed, so that didn't kick on, and that would have been the I guess the negative sign. Initially, we could see it struggling to recover, and then of course we had what looked like some sort of support, just above $18. It broke that and is now sliding. So looks negative at best. Maybe you get with an up day or two on the market, you get a small bounce towards 18 to retest it. But I think unless it's back above here, you get one day up. I'd be a seller. This looks like it's got further to fall. Okay, well that's all for this week. If you have a request, send it through, and I'll try to include your stock next Thursday.